Mic on.
All right, minor technical difficulties. This fucking thing. My computer, for some reason, um, in the middle of just working, it just shuts down. I think it's the graphics card, but whatever. I'm back.
Mic off. Mic on.
All right. So news came out that Trump is going to leave later on today to go back to the White House. Woohoo! I guess that's what this move is all about. This move straight up. All right. But again, as you can see, we're in the middle of nowhere, right? In terms of this structure, it's just price action is just going sideways in the middle of nowhere. There's nothing to do. It's just chop, boring. We'll be interested if it gets to the top or the bottom. Otherwise, it's just garbage. So I figured out how to have the chat app as well, so I can see it if you guys chat. Okay. So if you have any questions, just ask them.
Mic off. Mic on.
All right. So here we are popping back up again. We're going to the top of the wedge. All right. We're also breaking the previous high, which was right here. Okay. And again, this is all Trump news, right? Suddenly he's cured. He's learned a lot about COVID. Great, great people. Wow. Give me your vote because now I know better with COVID since I've been through it. So give me your vote. Yeah, right. Yeah, right. Guy's a scam artist. And if you are a Trump supporter, I'm sorry, but I'm going to call it as I see it. That is my view. All right. So top of the channel, we're going to break out here in the last hour of trading. I don't think so. Um, we still need the stimulus package. All right. Market now is up 1.55%. Again, that 2% is usually the the top for the day for a daily movement. It's an average upper boundary, if you want to think of it like that. Um, so we can still push higher and go incredibly bullish. All right, let's talk a little bit about expansion of structures. Now remember, this is 5 minutes, 1 minute. It's a short time period, so you get a lot more movements. It's not the same thing when you go to daily, weekly, hourly, monthly, right? It's a little bit different. But the nice thing about the short time frames is you get to see everything in a relatively short amount of time, and you can let me take this off, and you can practice with it and learn. All right. So what would be an expansion? An expansion of the structure would be if this continued on higher, okay, and then started to consolidate or pull back or whatever. Then at that point, if it hooked enough, again within the structure, then you would say, okay, well, here's the deal now. All right, this is the new structure, and then you would begin to count again, and you would say, this is I hate when it does that. So then it would become a 1, 2, 3, something like that. Okay. If you stick around long enough, you guys will start to understand these things. But and then that would be a thrust up move. Okay, that would make sense for the head and shoulders. That would make a lot of sense for the head and shoulders. We're not there yet, but just be aware of it that this is something that could happen. That would be an expansion of the structure. Gonna fix everything, put it back in place. All right. All right, there we go. We're back. And again, the chat is live now. If you guys have any questions.
Mic off. Mic on.
All right, so we're getting to 1 second because I cannot hear myself. There we go. Now I can hear myself. All right, so we're pushing all the way up to the top now. Here it is, right here. We need to push through the top of the wedge, and we're doing it as we speak. And again, you look at the bigger picture. All right, here's a bigger picture. We're breaking out of the previous high, not a problem. We had that consolidation right above the structure, the bigger head and shoulder structure. This is a bullish um, breakout. And again, you can redefine this structure, which was a rising wedge, which was, pointing for a bearish move down. And now it's going incredibly bullish, right? Everything is starting to line up for a breakout. Now, again, I don't think the breakout is just going to be, for the next 50 minutes. But come tonight, if we do go incredibly bullish, what it's going to end up happening when Asia opens, they're going to push it even higher. And then tomorrow, something's going to be announced, it's going to go even higher, and then you'll get that breakout, right? You'll get that breakout towards the top. All right. So still a lot of data to come in between now and tomorrow, but on the initial reading of the charts, that's what it's looking like is going to happen, right? So here's a 5 minute. There it is, starting to break out. Oh baby, bulls. Bye bye bye. Fear of missing out. Hurry hurry. All right, I'm gonna. There it is, the breakout. All right, here's another little rule. You can't just disregard price. So when you are charting, you don't want to disregard price. For example, this is no longer valid. This C wave is no longer valid. Okay, and the reason is because you had a structure in place, it broke out, and now the trend line is violating price. You can't do that. You can't do that. Okay, so there are exceptions, but can't do that.
Mic off. Mic
All
on.
right, look at that breakout, baby. All right, this is a particle move, right? It's a thrust up move. Um, there's another law. If you can't get in, you get in. And the reason I say that is because once it goes into a particle market, and it's not going to give you a wave, it's not going to give you an opportunity to get in, you get in because it's just going to keep going higher and higher. That's FOMO, right? So be aware of these things, okay? And again, the longer you stick around, the more you get used to these things. Okay. We're having a little discussion about Trump. Everything is fine now suddenly. You don't get to the steroids um, point in COVID, and then magically 2 days later you're okay. Doesn't work like that. Steroids is the lesser of two evils. Okay, um, it's not a. You don't want to be taking steroids when you have COVID. It's just when the doctor deems it that it's less risky not giving it versus giving it, then they're going to administer steroid therapy. And what happens with COVID is you get a rapid inflammation of your intestines, of everything, right? All your internals, just a rapid inflammation. And that's what usually puts people on a ventilator. That's usually what kills people. And if he got to the point where he's taking steroids, well, you're in bad shape, right? And then magically he's out and about risking people's lives if he had it, which I don't think now he did have it, or maybe he did have it and it was mild, but I doubt that at his age and his health. But anyway, magically goes out, waving to the crowd, putting people in danger, and then the next day he's like, "Yeah, I'm going back to work. Everything is fine. Don't worry about it." Right? In the videos when you watched him, there was no shortness of breath. Um, he has more shortness of breath when he reads off a teleprompter, right? But there was no shortness of breath. So I'm very, very skeptical. Very skeptical. And again, the market didn't sell off as it should have. I mean, there was some sell off, but nothing more than a normal pullback. Uh, had he actually been as sick as the medicine indicated it would, right? There's a lot of side effects. Do you want the commander in chief with so many side effects, brain freezing and so forth, and on oxygen, and not transfer power to Pence? Doesn't make sense. I don't know. The whole thing is it's just another Trump bullshit uh, line to bamboozle people so you can come out and say, "Oh, I've learned so much about COVID. Uh, I'm going to handle it differently now. I know what it's about." Blah blah blah. That's all this is. Right before elections. Give me 4 more years, I promise. Right? Garbage. Garbage, garbage, garbage. All right. Let's get back to charting. All right. Never lose sight of the bigger picture. The breakout. The breakout. Okay. Looking good. Looking good.
Mic off. Mic on.
Kind of interesting that even the small caps risk on have plowed right through the rising wedge, right? Um, just continue to push on higher. Now up 2.65% for the day. Nasdaq is up 2.2% for the day. Okay, these are the upper boundaries of a normal market. We're not in a normal market, but again, we pay attention to these things. Taking a look at the fags, up 1.4%. Okay, so it bounced right off the bottom trend line of the bear flag, back in the middle of nowhere. Okay, um, but clearly it's not a breakout as it is in the SPX, as we can see here. Right now, we got what, about 37 minutes left in the trading day. Let's see how this is going to play out. Take a look at transportation. That's pushing higher. Right in there. Okay, so it's up against resistance. Uh, Airlines, they don't look that good. They're not really participating in this rally. They're still waiting for stimulus money. Uh, Germany, not a whole hell of a lot. UK, not a whole hell of a lot. So, a lot of mixed messages. Taking a look at commodities. Okay, they're not really pushing as they should, given the increased amount of money that we're talking about in stimulus. So they don't think that a stimulus is going to be announced anytime today or tomorrow. Right? Otherwise, the thing will be breaking out. But it is a bull flag, and it is clearly defined. There's no question about that, right? Here's the top. Here's a 1, 2, 3 down. Okay, so it's in the middle of nowhere right now, towards the top of the bear flag or bull flag. But um, right now, it's not indicating that stimulus is on the way. Platinum, palladium, platinum, bleh. Palladium looking good. Copper had a big sell-off, popped back up, rising F flag. Okay, there it is. Well defined, hooked up, validated, no question, right? And again, I was teaching something here. So this platform I'm using right now is an old one, so got a lot of stuff in here. But remember, it's above this trend line. Okay, it's building that pressure above the previous structure. Agriculture, nothing there. Dollar, still holding on. Okay, go down to an hour. See here, it's building that pressure, even though this is an hourly chart, but it is building that pressure right down here. Right, building that pressure. This is bearish on the break.
Mic off. Mic on.
Yeah, semiconductors, those things are kicking ass. Right, up, there it is, straight up. Kind of charted out. This is probably a better way to look at it. This kind of works, but whatever. It's okay. There's a lot of gaps on this, but whatever. This is good enough, right? 1, 2, 3 up, going towards that previous high. Okay. Semis. There it is, right? And this is why I say, if you can't get in, you get in. And the reason you get in is because it's not going to let you get in, right? It's kind of like a professional gap where it gaps up and never looks back. And all the professionals are buying, and you're sitting there, looking at it, waiting for the pullback, waiting for that wave to come back, and it never does. Never does. Yeah, this is public. I'm going to do a few of these videos public for a while. But the trades are not going to be public, of course. Look at that. Go, 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 go. You're going to miss out if you don't buy. Go, 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 go. All right, S&P now up 1.77%, right? Still hasn't hit that 2%, but I think it probably will in the last 30 minutes of trading. Again, I'm going to take this off because it's no longer valid. This I'll keep. The upper trend line I'm not going to keep there. I'm going to take it out since it's not validated by this wave now. Rolling, rolling, rolling. Just going through some of the data. Loans and leases in bank credit, all commercial banks coming down in August after hitting all-time highs in May. Corporate profits all the way down to 1.5 trillion per quarter. Uh, this one is interesting because it hasn't really pushed since what 2012, right? 8 years, and you can't get corporate earnings up. Uh, Not good. All right, another 28 minutes to go in the session. I'll be right back.
Mic off. Mic on.
All right, quickly let's take a look at semiconductors versus the NDX. And as of uh, last few days, about a week or so, semiconductors have been outperforming the Nasdaq, right? But it is in this range, right in here, kind of going back and forth with it. And that's not a range. There you go. So somewhere in here, it's kind of consolidating. Um, we'll keep an eye on this. All right. SPX to gold, one of my favorites lately. SPX is actually outperforming um, gold, and that's been about, again, a couple weeks that that's been going on. Nasdaq versus S&P 500. Nasdaq has been underperforming, which is interesting, isn't it? And what do you see? I'll give you a second. One. Okay, no, it's enough. Right, head and shoulders possibly forming here. Right, we're not there yet, but if that's the case, uh, you're going to start seeing that NDX is going to be underperforming SPX. That's going to be interesting. All right. 23 minutes left to go in the session. Trump is magically now fine. The hard worker. Fuck. He's going to go back to work. He's been working throughout COVID. he's a tough man. Unbelievable. Keep going, baby. Keep going. Go, 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 go. You're gonna miss out if you don't buy. Quick, quick, buy. And again, particle, right? See it? Straight up. But again, it's a 5-minute chart, so these are common, especially when news breaks.
Mic off. Mic on.
Ah, you're talking about these semiconductors. Taiwan. Yeah, well, Taiwan is doing great. IT's hot right now. With social distancing and distance everything. Everybody working from home. Yeah, Taiwan semiconductor manufacturing is kicking ass. Yeah, this is from Mark Partridge. Yes, you are famous, my friend. Very, very famous. Very many. Very many. All right, we got about another 18 minutes to go. Kind of stalling out, uh, but again, I'm not reading too much into this. It broke out. If we do get some kind of a pullback, the bias is to the upside. You know, um, it's clearly a breakout, right? So you can't argue with that. So there it is. Clearly a breakout. It'll take days for this to continue to go on up. So, if you guys are not on if you're not following me on Twitter, there's really good information here. Now, the economic data means more when you're near a top before everything happens, but it's very good to follow now, even though it doesn't mean as much because obviously everything is in shambles. Um, and any data that comes out now is just, well, it's better than expected. Everything is better than expected, right? Like you look here at the total non-farm employees, it's flattening out, right? About 140 million people working versus almost 154 million working. So remember, the unemployment went down to 7.9 because the labor force participation dropped off, right? It shrank. Anybody that's unemployed beyond 28 weeks, they're not counted. So we drop them off and things look better than they really are. That's the argument. But look at it from a different standpoint that they're only measuring the rate of change. Okay. And that's why we have labor force participation. It's not like we omit it, it's still there, but the unemployment is not um, increasing as it was before. And that's the point of dropping them off after 28 weeks. So don't get too conspiracy about it. Okay. Standard deviation 132%. Right. That's pretty bad. Pretty bad. Everything is euphoric. ISMs, yeah, this is an isolator, right? It's an isolator. It doesn't mean a whole hell of a lot. ISM service composite, 50, whatever it is, 57, 58. So what? GDP is back to 2014 levels. Right? Same thing with purchasing managers index. Pent up demand, you'll get that. When the economy opens up, you're going to get that bounce. But it's like an isolator. Are you going to run out in a uh, in a falling market because the RSI is plus 50? No, it doesn't mean shit, right? So know how to understand these charts. And again, if you follow me on Twitter, these are automatically posted. You'll start to learn how to understand them better. Okay. Testing started to come back, by the way, in COVID, which is good. Positivity rate is stable at 5%, although there are some areas in the U.S. that it's starting to rise again, which makes sense going into the flu season. Uh, Car sales, right? They've popped up again. They're at 16.3 million. The average historically has been just shy of 18 million. Um, so we're down, I don't know, what is it, 20%, whatever it is. But when you start seeing these, pops in auto sales, Doesn't mean that the economy is back to normal. It just means that, you know, pent up demand is being reflected in the data. Some of these charts here, they're not mine, so just be aware of that. But always good to have a different perspective on things. Right, look at this one. Maybe you can see it better now. Percent of permanent job losses, right? It's accelerating faster than the previous two recessions. That's pretty bad. But again, stocks are at all-time highs. Leading indicator, right? Still negative. It's still negative, but it's a weekly. But there's nothing there. And again, stocks near all-time highs, so doesn't make sense. This is when you. This is the best of the best. This one. I, ca- I called the motherfucker a clown. I can't, man. That's the best. Hotel occupancy has flattened out. We're going into a low season, so we'll see how this behaves. But clearly, we're way, way below uh, what we were back prior to COVID. ISM, same stuff. Nominal versus real GDP and disposable income. Helicopter money, right? Look at that. So keep an eye on these things. Come and subscribe. I think it's going to serve you well in understanding macroeconomics. Let's get back to our little chart here. Okay, it's kind of stalled out. Makes sense. End of the day, and that's what I was talking about earlier. I don't expect this to go off today, right now, right? But um, come Asia Open tonight for the U.S. tonight, you're gonna probably see another pop, right? And then tomorrow's gonna be another pop, the breakout, and if this were to fail, what would that mean? Well, it would mean a fuckery move. And from failed moves comes fast moves in the opposite direction. Another law, another rule, right? If you did something like this, ooh, it would come down very fast. Uh, so I think of this kind of breakouts like the space shuttle taking off. The first 10, 20, 30 seconds is a very slow, dangerous kind of liftoff, and then it just boom takes off, right? And and that's the difficulty when you're trading. You're in that range, that first 10, 20, 30 seconds of the space shuttle taking off. You don't know if that fucker's gonna come right back down and explode, right? So um, that's the visualization I would use for that. All right, another 9 minutes, and we'll call it a day. All right, I'll be doing some of these videos uh, publicly for everybody for a while, as long as I have time. The trades will be only for Patreon subscribers, and some other key things will be for the Patreon subscribers. But I want to introduce everybody to bare knuckle charting, and I'll probably do um, some videos on bare knuckle charting after I'm done building an economy from scratch. Uh, I think, because that's the way I look at things, right? I contrast price of the market and macroeconomics and see what jives, right? And find the best risk rewards and go from there. Completely different than what most people do, obviously.
Mic off. Mic on.
stuck. It's stuck. NYSE stuck. Dow Jones stuck. Nasdaq is stuck. Everything's stuck. Yep. Well, look at this one, right? Small caps. They're not stuck. And this is a 5-minute chart, right? Look at that. Almost 3% up for the day. That's huge. That's huge for such a overvalued market. Like, wow. Imagine Apple is worth more than 2,000 stocks. Crazy. And again, the PE is like 93 or something, right? So it's impressive that it can make such a big move today, right? And that's recent almost all-time highs. But on the bigger picture, this is more indicative of what the market should be doing, especially in the Nasdaq, than what it is doing, because you have that lower high. Okay, that makes more sense. Not all-time highs like it is in the Nasdaq. That's just garbage. It's just garbage. Right. Here's the previous high, and I mean, come on, give me a break. In terms of the head and shoulders, the Nasdaq is lagging. Obviously, it still has a ways to go. We could make an argument that it broke out if we draw the neckline like this, but it's you're leaving the whole right shoulder out, so that can't be true, right? So you could do something like this. That would probably look a little bit better, but it doesn't matter. This whole entire area in here, and this is something that I talked about with subscribers last week. This whole area in here with a bunch of previous highs is going to act as resistance. And that's exactly what happened right in here, right? So now we're coming back up, and I think Mark asked me, is this cup a handle? You could see it like that, of course, but I think it's just the head and shoulders is more telling. So this would be the cup, this is the handle, and then off we go, right? You can view it like that. There's nothing wrong with it, but I think the more inclusive, bigger structure is the head and shoulders. That's the one that we really want to see push higher. And again, um, what I told subscribers last Friday is that if we come back up here again, this is going. You can only test it so many times before it gives out, right? So keep that in mind. Fags continue to push up, now up 2.33% for the day. Mm-hmm. Yep. Yep. You gotta be bullish at this point. You can't, you know, you can't be bearish with structures like this. All right, 4 minutes left in the market. What's up, Adam? Adam is one of our top chartists. Adam kicks ass. Three minutes left. Doesn't look like it's pulling back, does it? Yep, that's a part of the market. Can't get in, you got to get in. You see how price here is high basing? This is what we call a high base, right? Just high basing, building that pressure, building that pressure. Thrust up, build the pressure, thrust up, build pressure, thrust up. That's the way markets move, right? Now, obviously, this is a 5-minute chart, right? And it's a particle market, pushing higher. That doesn't matter. It's still going to have these kind of structures within them. They're not waves. They're just high bases, just consolidations, building pressure, then boom. It's like a pressure relief valve. It just shoots up. And that's why I'm saying that I expect tonight, Asia opening, that this will probably push higher, right? And again, you never know. Nobody knows. You're just basing risk reward probabilities. That's it. And that's the whole point of everything of bare knuckle charting. Right? Sometimes you'll do everything correctly and trade it wrong. Right? That's the cost of doing business. And this past 3 weeks has been fucking impossible with constant 7% moves within 2 days, 3 days, up and down and up and down and up and I mean, if you lost your ass, don't don't feel bad. I lost my ass too, and so have a lot of other people that I know. Uh, but it has nothing to do with anything else other than the market just being extremely volatile, right? Extremely volatile. All right, 4 o'clock. That's it, guys. High basing. We'll expect more upside. I'll do these videos live now for you all, and I'll do it whenever I see something important, and I'll definitely do it when the market is open. Uh, if I'm awake, I'll do it early in the morning. If not, I'll do it towards the closed, typically. Okay. That's it. Take care, and I'll talk to you guys soon. Don't forget patreon.com/RealMacro. Come on down and subscribe. Take care. Talk to you soon.